first of all, we have about 1.8 million barrels of crude oil production offshore the Gulf of Mexico that has been taken offline. At the same time, we have refining capacity of close to 3 million barrels that is right now not operating. So on a net basis, you see that the refinery is not operating, crude oil supply is not being supplied. In theory, that may lead to a little bit of a stock build. But of course, product inventory may be drawn down the line as refiners are not producing more products. Overall, usually what hurricanes always do is they're helping the product market a little bit more. Refinery margins in this point of time are always a little bit supportive.
Yeah, because refining margins across the board are under a huge amount of pressure anyway, I guess, whether it's nat gas, whether it's oil anyway. So we spent most of the early part of the year, Johannes, everyone's suddenly becoming experts on the levels of inventory at Cushing and elsewhere. Has that longer term picture abated somewhat since then, where the pressure on storage has come away a little bit and actually more product is getting to market, more product is being needed by the market?
Right, Stephen. First of all, crude oil inventories are still 20% higher than what would have been last year's numbers. On gasoline, they're only slightly higher. That means we're probably in good terms right now in the next 2 weeks to come to a 5-year average. And when it comes to middle distillate, remember, that's the one that also not only has diesel, but jet fuel, which is not really consumed right now. Middle distillates are at record highs. Yeah? So they are very high. And they're about 32% higher than what they would have been a year ago.